Hello to everyone dialing in and welcome to Blockchain, the Future of Finance webinar. I'm Joseph, the organiser of this panel, and I'll be handing over to our moderator, Monty Mumford, in just a second. Before that though, just a quick note on timekeeping. We'll be ending the webinar at 1:15, at which time we'll head over to Digital Hangout at ditto.tv/TCC. This is a strict deadline, so we better go into it. Over to you then, Monty. Thank you.
Thank you very much, Joseph. Good morning, good evening, good afternoon, or good day to all of you. I'm based in the South Downs, 45 miles south of London. There's no lockdown here, let's be fair. National Park around the corner, so all is well in my world. I'm your moderator of three very, very smart people. My job is to keep them talking without taking over. For creds, I'm the co-founder of a podcast called blockspeak.io, financial business and blockchain podcast. It's been doing very well over the last 2 months. A venture partner in 7BC. We're raising a fund to invest in blockchain, IT, and AI companies. And I've had a reasonable career as a speaker, interviewing Kim Kardashian, Steve Wozniak, and have written for Forbes, Telegraph, MIT, blah blah blah. Just so that's my nonsense out of the way. I have a little boutique PR agency called Mob 76 that helps company get famous. Anyway, so this afternoon, these three people, they're not all men, you'll be pleased to know. Oh yes, they are. Sorry. I have Olivia von Landsberg-Sadi, who's the CEO and founder of the BCB Group. Aman Kohli, the CTO of banking at DXC, and the former head of emerging tech at RBS, and the founder and director of LAB or Lab 577, Richard Crook. So what I'm going to do is I'm going to ask them to introduce themselves, maybe a couple of minutes, to see what the relevance is for the future of finance and blockchain, and how you, the audience, will learn from our discussion. So Oliver, over to you first, please. Introduce yourself.
Thank you for that, Monty. Hi, everyone. My name is Oliver von Landsberg-Sadi, and I run a company called BCB Group. BCB Group are a business banking challenger in the crypto and blockchain space. We provide bank accounts for the unbankable. So this cryptocurrency and blockchain era, which mainstream banks have trouble measuring the risk of and mitigating the risks that are specific to this industry. This is our specialty. We also offer market services for example, OTC trading in cryptocurrencies and FX, and we do custody of cryptocurrencies. My personal background is a mix of investment banking. I was at Barclays Capital for 12 years, where when I left, I was a VP in the valuations space. So I've seen quite a broad spectrum of roles within the investment banking space, starting as a quant engineer and moving through various trading and structuring roles. So I think that's kind of hybrid of finance background and the hardcore tech found a really natural landing place for me in this cryptocurrency industry. And now it's great to have an opportunity to lay the groundwork for a scalable infrastructure for this space, starting with the simplest bits which need work, which is making money move.
Making money move, right. That's what we all need at the moment. I think 25% of the world's economy has just disappeared, hasn't it? We'll probably come back to that type of thing. I don't think we can get away from the C word, if you know what I mean. But thank you, Oliver. Aman Kohli, tell me about you, or tell the audience about you.
Yeah, so Aman Kohli is my name. I work for DXC, and I'm focused on financial services. And I've been working with blockchain and crypto for a long time. And what I'm interested in talking about today, if Oliver's making it move, I want to give it a bit of a groove. So it's really about making all of this of what's possible with technology, and what the needs are happening in this, wait for it, post-COVID world coming to light.
And your career, sir? Could you give us some creds?
Oh, my career. Okay, yeah. So I've been at DXC for the last 18 months. Prior to that, I was at Microsoft and Citibank before that, where I held roles in things like architecture and working with startups. And prior to that, I worked in financial services for HP, where I did algo trading systems, amongst other things.
Okay, well, that sounds like good cred to me. Last but not least, Richard Crook, tell us about yourself.
Thank you, Monty. I'm standing up in the Chiltern Hills, what some of us call the Crypto Hills. I run Lab 577, which sits within the nexus of emerging technology and financial services. We brought to market last July now the digital asset shared ledger, Dazzle, which is bringing financial services companies onto the public quarter network and building a liquidity network between them in digital assets, and we're enjoying that. Just in terms of my background, I spent 10 years over at UBS building ledgers for their investment bank before the time that ledgers became popular, and then the same amount of time over at RBS, where I ended up running their emerging tech lab, taking the shrink wrap off quantum, AI, and obviously blockchain. Before we, as a team, came out of Royal Bank of Scotland in, I think, 2018 and started Lab 577.
So it's Lab 577, that's how you say it, right?
You just keep saying it, Monty. Thank you.
Well, anyway, great to meet you all. Obviously, you're way more intelligent than I am, so my job's going to be easier today. Just a brief note for the audience today: the webinar is being recorded, and any questions that you have, go into the GoToWebinar side panel, and we'll kind of curate them as the conversation goes on, and there'll be some time for some Q&A at the end. As I sometimes wonder that Q&A should be at the start, might be more interesting, but maybe that's from another day, because there's not likely to be a physical conference for some time. Right, just to give you a short overview on the topic, what we're going to do here, I mean, you can tell by the introductions of my panelists that they all seem to be very much pro blockchain, and undoubtedly believe that it is the future of finance. I may become a bit of devil's advocate in the course of this conversation. I'm not so sure it's the panacea that everybody says. But what we're going to do is we're going to delve into how blockchain and digital assets have come of age. A description of digital assets would be good for me because it always confuses me. And how they're set to transform the financial services sector. And there'll be a time, as I said, at the end for questions from the audience. Then there'll be always a sum up from the last what am I talking about? The last comments from the three panelists. I haven't talked to anyone for 7 weeks. I've gone a bit crazy. So as most of us know, as most of you know, blockchain is starting to hit the mainstream, and blockchain applications in finance have moved far beyond cryptocurrency trading and speculation. Financial institutions are starting to embrace this new digital asset class to open up new opportunities for their clients. Why would they not? But what does it actually mean in terms of regulation, security, transparency, and how much, if any, blockchain and that digital assets have come of age? My opinion, businesses can no longer ignore blockchain. Even last year, a Deloitte report cited, check my notes here, 53% of executives viewing blockchain as a critical priority for their business. And this will rise as the move towards digital currency builds, with 6 of the world's central banks in discussions over a CBDC, which is an acronym for the central bank digital currency, or, digital money, I suppose. I'd be interested to know what the panelists think the difference between digital fiat and cryptocurrency actually is, decentralized via uncentralized, whatever. And also the Bank for International Settlements has also highlighted the shift in payment habits due to the C word, and how things may go forward from there. So, right, I'm going to stop talking. I'm going to start with you, Richard, going kind of like ever decreasing circles. I presume you're a bull. or a bear or both, but are digital assets only fit for certain market cycles? The volatility we've seen on the stock market, which in my opinion is still to come, would make many in the cryptocurrency world laugh because of the volatility of their own digital asset class. What do you think? Do you think that digital assets are only fit for certain market cycles, or are they part of the mainstream, Richard?
I think it's important that we get to see all of the market life cycles, or each of the market cycles, to then be able to understand if digital assets only fit into one of them. And we are certainly seeing now a bear market in the traditional financial instruments. And in doing so, we get to then compare that to the virtual currencies, which are a subset of the digital assets. We expected Bitcoin to carry on moving with gold as the flight to safety occurred, and as the liquidity ran out. Actually, what we saw was Bitcoin crash in price, as actually people needed cash, and Bitcoin being a very liquid asset, they could convert it to cash very quickly, and so they did, and they can't do that with gold, and so it dropped its correlation. Or
why can't you do it with gold? I didn't know that.
So you can do it on a derivatives for future and options, but the physical delivery of gold and the custody of gold takes time. So actually, one of the benefits of Bitcoin was, as a digital gold, it was expected to hold its value against gold. But sadly, the benefit of being very liquid also means that in times of fear, bear market, actually Bitcoin underperformed. We're now seeing.
The point I'm trying to make is that, say I've got 50 grand in gold, right? Which I haven't, and I thought, shit, I need to take 10 grand out of that in mid-March. I need 10 grand of that money. Can I just get that straight away? I can, right?
It depends how you're actually holding that. Usually not, Monty. It's usually
really
more difficult to sell it than you thought, especially if you're physically holding it.
Yeah, I can understand. I haven't got a gold nugget or an ingot underneath my seat, but I mean, I just thought if I'd invested in gold, I could just take it out. I could take out anything else.
And you can take it out, but the settlement period, and you may find you are held into or locked into that gold purchase, depending on how you've held it. But what Bitcoin provides is a very liquid resource or a liquid asset, and people found that they could liquidate that much quicker, and they did.
Yeah, I agree with that.
But that then turns you to the next cycle that we're now seeing, as each of the sovereigns start to print money and the deflationary genie starts to raise its head. Actually, Bitcoin is now being seen as a store of value, and we're now seeing the price rise. So when we focus on virtual currencies, which are a very small part of the overall digital asset space, what we're starting to see is it does have a financial value, and it keeps having a financial value regardless of that market cycle.
So do you? So
I think it's interesting.
Before I pass, is that a man? I was going to pass it over to you. What's your point?
Oh, sorry, it's Ollie, and I just wanted to add to Richard's point there on his comment about seeing prices rising, and it's a really quick side note that especially in the COVID-19 area, I think that I don't think of it as a price rise in Bitcoin. I think of it as a price decrease in USD. I look at it as USD going down, not as Bitcoin going up.
Well, isn't there? I mean, I did a podcast recently where I was put right, basically, is that leading currencies of the world generally last for about 100 years. So we've had about 100 years of the dollar. Before that, there was a century of sterling. Before that, it was the French franc. Then it was the Dutch guilder, and before that was the escudo, right? So I am also of the same mind that it's time for the dollar to go, but it still seems to be holding its own against other kind of fiat currencies. So what are you saying then? You're saying that you're with me, that you think the dollar is going to crash or it's going to fall?
It's more of an amusing kind of observation that when we look at the BTC USD price and people get excited about the price going up, I get more excited by inverting that ratio and watching USD go down in price. So it's
yeah, an architect of your own grave digging. Yeah, okay. I'm just, this is weird. I've never really done a webinar. I'm used to doing all these video podcasts. That was you, a man. Was that you, Oliver?
That was Oliver, and I'll hold on until I'm called.
A man. What do you think to what Oliver just said?
Yeah, well, anywhere where you can get amusement, I think, is great in these lockdown days. So I think I'm going to invert my tracker sites now, and just to look at it in that light. And there's a lot to be said for it, right? I think you raised the question. Is the U.S. dollar going to go away? No, I think not in the short term. There's a lot going on that's probably going to prevent that from happening or not happening. We just have to see at the comedy show that is Europe right now, with trying to get Euro bonds and German government getting in trouble, just to see that there is no plan B for that.
No, quite.
I think returning to your kind of question around what's the role of crypto assets and what's going on prior to the current COVID meltdown and the market readjustments that have been taking place, there's been a huge investment and drive into digital assets. But overall, it's a small market, right? It's a couple of $100 billion. It's not really moving any needles in that regard. But
maybe you could tell the audience what percentage of the whole of finance. It's less than 1%, right? Way less.
Yeah, it's way less. We're talking trillions of dollars, right? In terms of the finance view of things.
Yeah.
However, I think a couple of things have been shown that the reason why these assets were being created and these exchanges are popping up and the regulators are focusing on it is this is going to be the next thing that people are going to be investing in. And the volume of that investment we'll just have to wait and see what that will be, but it's certainly gearing up as being its own vigorous asset class. But the way to survive any of these market cycles and not be a cyclical thing is, just traditional, access to market, transparency, having liquidity, all the good things that are there. So right now, at the point of maturity of the crypto assets, we're seeing the liquidity problem being addressed. If you look at the liquidity of the exchanges right now, they're much better generally than they were a year ago. So that's a good thing. But will they be able to maintain those liquidity levels if the Bitcoin price goes up by a factor of 5 or 10? Or new exchanges being created around synthetic assets, what's going to happen there? But the number one thing is it's how quickly is this industry adapting and developing, and it's pretty quick, right? And that's very impressive. And I think we'll see what's going to happen in terms of investments once the economies are open up again.
No, absolutely. We're talking about amusement. I find it quite amusing to the volatility of the stock markets, and everyone starts realizing that Bitcoin or other cryptos are seen as a safe haven. I mean, that just makes me laugh every time I hear it. Do you know what I mean? But I think market cycles are all very well, right? And there are people, as Richard said, and take some money out because it's easier to take out than gold. I mean, I'll be honest, I took out some cash because I thought just in case the ATMs went down, and I filled up the car with diesel, and I've got 2 petrol cans as well, just in case it went feral. So that just shows you what type of person I am, a bit of a warrior, so that's probably why I'm not an investor. And I did have 163 ether stolen a couple of years ago. That cost me 30 grand. So as the price goes up, I get sicker and sicker. But I went to a kind of Chatham House Rules meeting with the Bank of England as part of being a VC just before Christmas. And as you say, the speed that this ecosystem is being created is extraordinary. And the words, which I can't repeat word for word, obviously, from the meeting with the Bank of England, is that they're very serious about blockchain, right? They're really, really, really serious about it. And
they are.
obviously, I mean, but again, no one's really. I mean, I got out of crypto because I got burnt, right? There's some pretty dodgy characters as well. But there was a point when I was in a cafe and there were two builders behind me, and they were talking about Bitcoin just before it collapsed. Do you think that COVID in any way is going to influence the way that people see Bitcoin, or is it just I've got too much to worry about here, man? Do you know what I mean? I'm on a 0 hours contract, or I heard today that BA are pretty much bringing in similar 0 hours contracts just so they don't have to get a bailout from the government. The whole system is rigged, if you ask me. But the coming of age of blockchain and digital assets, I mean, I've heard it a few times, right? What do you think, and where are we now, Richard? What's the state of play? Have blockchain and digital assets come of age, or are they still going through puberty?
Well, I love that. I love that. I love the idea that they're going through puberty. I think the things to recognise here is, yes, the Bank of England is excited. Yes, the Bank of England is worried. You're seeing that in many other countries, not just the UK, be it the recent COVID response from the US that cited a digital currency. You've got the Banque de France kicking off their project for things. And over in Switzerland, SDX under Tim Grant is leading the charge on a Swiss central bank currency. So I think it's worth recognizing that it is not just the UK, it's not the Bank of England. In terms of that puberty, what we've had in the early years in the fintech space is a number of banks, digital banks, start by issuing different colored debit cards, the most famous being Monzo with their coral pink. And that is sadly just lipstick on a pig. The underlying market infrastructure is what blockchain and Bitcoin are going after. And actually, Bitcoin and blockchain have always been used synonymously. But if we leave the virtual currencies behind and we focus on the underlying technology, we've moved on over the last decade at a breakneck speed to now start to recognize that the concept of digital assets, the movement away from paper and outcry trading to electronic trading was done over the last 10, 20 years. But now we're actually moving to holding value in a digital form that we can move across the internet. So while we've just rolled out the Internet of Information, what we're seeing now is the rollout of Internet of Value. So it is no surprise that the central banks, who are the guardians of that financial services across the globe, are interested and are sitting up.
Are they too set in their ways with their silly old infrastructure to be able to be adaptable, though?
I don't think so.
No, we learned this. I'll let Ollie say, but no, we learned this in 2008. The central bankers do not in any way take any of this lightly. They are very switched on.
Yeah, that's your opinion, Richard. Oliver, you were going to come in there?
Yeah, I'm picking up on Richard's point. The central banks absolutely all over this. I mean, the Bank of England are one of three in this crypto asset task force. The other two being the Treasury and the FCA. And they've been looking at this, for a long time. And I guess where we're going in this part of the conversation is looking at CBDCs and what that means for the blockchain and digital assets coming of age.
Could you tell what that means? Because I don't know what it means, and I'm not sure the audience. CDBC. Excuse my ignorance.
Absolutely. So central bank digital currency is central banks all over the world waking up to the benefits that blockchain technology can bring, while trying to retain sovereignty over their own currency. Those are many words. A few. I could compress that as it is digital money issued by the bank.
Or
so
digital,
it's not a cryptocurrency.
Digital fiat.
Yes, it's a digital representation of fiat.
Yes. Okay.
So it's a, I don't know, is it lipstick on a pig is what I wonder, because the central bank still has the ability to perform quantitative easing as it has in this COVID era. It still has full control. It is a centralized digital currency, which makes it very different to cryptocurrencies, which are very much more decentralized and run by the owners of the asset, not run by a central organization. But I mean, there are some significant upsides to issuing CBDCs. And I prepared a list earlier and I lost it, but here it is. Okay. So I guess one of the big things that countries are worried about is money laundering and terrorist financing. Now, if that currency were controlled, if that digital currency were controlled by a central bank, with the kind of traceability that you can get uniquely in a blockchain, you can't follow a suitcase full of dollar bills. You can follow an asset on a cryptocurrency based or a blockchain based payment scheme. So that's an immediate benefit right there that they're looking at.
Yeah.
So maybe it makes so much lipstick on a pig, a bit like me, a beard on a weak chin, or mascara on a plain face. I just wrote down. That's because
there's a little bit more to it, I think, as well, right? So the Bank of England in the past, in particular, has been focused on having a decentralized cryptocurrency to a certain degree to help prevent any sort of cyber attacks and make the economy more cyber resilient. But interestingly, if you see where the effort is right now compared to 18 months ago, even by central banks on this, it's around dealing with big flows. So we spoke a little bit earlier in this conversation around crypto assets, which are kind of small flows in the overall scheme of things. But at the other end of it, right? So when you have these big securities and other sort of money moving at a central bank level, they're moving in billions, if not trillions of dollars at a time. There's a lot of focus right now in how can we do that in a way that gives us all the benefits of distributed ledgers and blockchain, i.e. security, transparency, obviously, but then also a way that's non-reputable. Sorry, I just got some post in the door. Non-reputable. And that's very important for big money flow. So you can imagine a big security settlement coming from one of these exchanges or depositories, and they have to settle £2 trillion. Well, how do you do that in a way that makes sense and that doesn't involve touching the cash supply, and that is using things like central bank money and creating this third type of central bank issued money, which happens to be digital? Because right now, we have money, we have cash, and then we have kind of an intermediary form which is being used by wholesale banks in the background. And that's how they create the money that you and I buy our houses with and our cars with and things like that. So they want to create this third.
I definitely see your. I definitely see the big money argument that Aman is making here. And there is a mirror in the small money space as well, because with the CBDC, you've got financial inclusion, which is one of the things that cryptocurrencies have tried to achieve as well. Imagine being able to provide any legal resident or citizen with free or low cost bank accounts. That would be how people, one direct benefit at the very opposite end of the scale.
So how do we get industry? How do we get industry traction at scale? How do we do that?
I think there are a couple of ways, right? So, kind of picking up the point Oliver just made there, I think having this notion of using the technologies that we have around crypto for the unbanked and citizens is important, and that's one sure way to get penetration and usage. Like one of the biggest use cases I saw with Bitcoin early on was just this use case here of remitting money to countries that had barriers up. There were dictatorships there. tight control of money supply. So what people would do, relatives would do abroad, is they would remit money across borders using Bitcoin, and it would be exchanged at the other end for local currency. So I think one of the things you can do is, you can have this notion of citizen wallets and citizen access, and it's in fact more secure and better than having the current system in a kind of a very simplistic way. But also,
sorry,
yeah, go on.
No,
No, I was going to
well,
say,
one of the
in
things.
order to have that, you need a strong sense of digital identity, self-sovereign identity to support that. But go on, sorry to interrupt you.
No, so it's just I read something very interesting the other day. One of the things that kind of annoys me about Bitcoin is that you can't spend it as much as you can liquidate it, as you said earlier, Richard, very quickly. But there's not that many places where you can actually spend it on normal stuff. There's the odd airline, and there's probably more than people imagine and less than there should be. But
there's a news agent in King's Cross.
Argentina is probably the country in the world that accepts Bitcoin like no other, because of obviously the peso and their continuing currency nightmares. Argentina, you can buy a load of stuff with Bitcoin. Do you think there might be something that would happen, like I don't know about Venezuela? I think they were trying to reverse mine a cryptocurrency, whatever they were doing with their money. But do you think that maybe the industry traction at scale will come from countries that allow cryptocurrencies to be spent, such as Argentina? Does that make any sense?
Yeah, I agree with you 100%, Monty. And I think the key for those countries to allow that is to have the proper regulation in place that brings cryptocurrencies, blockchains, these various, this new era of payment technology to be, recognized as legitimate. So one of the keys to
look at PayPal. PayPal's easy.
Indeed, we need it to be easy, and we need to have
I've got a feeling we could all talk for hours, but we are under a pretty strict deadline. So, Richard, I'm going to come back to you, right? Privacy, I could never say this word. Anonymity, I did, versus transparency. What do you think their respective roles are in the digitization of capital markets? I mean, what are the issues here with privacy, anonymity, yes, and transparency?
So I think transparency is very much what we use to build trust. Obviously, we have a large amount of trust in our existing financial system. Otherwise, it wouldn't be there. The financial system is built on trust. And for the virtual currencies that we've seen emerging, transparency was tremendously important. So underneath the covers of some of the early blockchain technologies, we shared everything. You could see everything on Ethereum, on Bitcoin, on Ripple. Every transaction is transparent. Then when you start to look at the commercial applications of that, as we have done over the last half decade, you suddenly realize that actually I don't want everybody to see my outbound or inbound payments. I don't want to see every commercial transaction I make with my clients. I certainly don't want my competitors to see that. And we saw that when we brought 5 of the Irish banks together to build a distributed clearinghouse. They were very pleased to see that they could see everybody else's payments on the clearinghouse, but then realized that theirs were also totally transparent. And that's what started us on the journey of Corda. Those requirements were passed into Richard Gennell Brown, Mike Hearn over in R3 to get us a finance grade blockchain technology. And that's what Corda gave us. And to a great less extent, what you've been watching over the last half decade in the crypto space is the recognition that you cannot, in financial services, be anonymous. I'm not even going to attempt the word you've used, Monty. I too also struggle with that one. But the task force around anti-money laundering and counter-terrorism funding, which were all brought in over the years since 9/11, are real in the financial services, and you cannot step around them. So you cannot be in a situation where you're running on a ledger that allows you to be anonymous. You might be allowed to be anonymous on the internet. That's just for information. And we're starting to see the problems that brings with Facebook, Analytica, and so on and so forth. Yeah. So in terms of privacy, when you're in a commercial setting, you do want privacy. And yes, we do want transparency to our regulators so that we can build trust. And we do not want to be anonymous because we're trying to close down the criminality and the terrorism.
No, that's very succinct, Richard. Thank you. Oliver, can you add to that very succinct summary?
I think that really wraps it up quite well. There's a thin line between, privacy and anonymity, but as soon as you enter the system as an actor, you're no longer entitled to privacy if you are changing a system, and by changing a system I mean moving money, or purchasing assets, or issuing equity, or whatever you're doing to that. It's not sustainable or viable to do that on an anonymous basis, which obviously is contrary to what a lot of the very far left Bitcoin fundamentalists want. But Bitcoin fundamentalists want that complete anonymity. But it's for a maturing institutional industry, it's not there.
I'm not sure if they're far left. I think they're just anarchists and nutters.
Well, that's fair enough. Oh, and I think you'll find it's pronounced anonymity.
No, don't do it. I'm not getting into it. But say it one more time. It sounds beautiful. Say it one more time, bro.
It's anonymity.
That's much better. What a man. A man, can you add to that? Not to the word, obviously, but to the A word. Can you add any more?
I will anon, but before I get to it.
Hey, the winner is.
Yeah, I'm in town all week. Actually, until lockdown's done. So I think we need to decouple the sorts of, again, things we're talking about. When you're talking about big money flows, of course you have to know who's making them, how and where and why. I think when we get down to personal transactions, the privacy bridge will be solved, I think, before this gets adopted, to figure out, did Monty buy that Mars bar in Huddersfield on Valentine's night or not, right? That's the ultimate test of, does that information need to remain private? I think people generally feel it does need to. And we're going to see solutions coming in around that. I think everything we've spoken about today doesn't speak against that. There are certain things you can and can't do right now that enable that to happen. But, one area of, progress where we can get is just getting this digital identity created and deployed and rolled out that preserves privacy and anonymity. There we go. And also gives the right level of transparency we need. Because, a good thing we're seeing with the COVID-19 payment world is governments are now paying and supporting businesses just to help people through this, get over this economic hurdle. But one of the biggest stumbling blocks is they can't figure out who people are.
Yeah.
And then to get money out of them.
More of the case is kind of like, know your customer, but don't strip your customer. Do you know what I mean? I don't mind being verified or anything like that, but I don't really want anyone to know too much about me. We have zoomed through this in the last 40 minutes, gentlemen, right? So I'm just looking here at some Q&A from our wonderful anonymous audience. You see, I can do that word. So I suppose it's going to have to be a bit quick fire, this one. Richard, I'll probably come to you here. Which provides the most security, private or public blockchains?
The private and public blockchain is a fallacy that's driven by certain vendor factions. It's fear, uncertainty, and disinformation, I'm sad to report. There are private and public blockchains in all of the different technologies, be it Hyperledger, Ethereum, or Corda. What we are expecting to see is the same story or movie that we saw in the late 90s, where companies start creating intranets using the technology inside their houses and then punch holes in the firewalls to get out onto the dirty public internet. And so you should see most, if all, targeting the public network soon, and that will be a straightforward, normal passage of time.
Thank you. Aman, it says for you here, Which blockchains are we seeing financial institutions lean towards when adopting blockchain? Corda, Ethereum, Hyperledger?
It's pretty much all of them. It depends on the use case. So Ethereum is loved for tokenization. Corda is loved for the community. And then there are a bunch of others like Settle and other ones out there.
There's enough out there, right? Yeah, there's enough to go around, enough to go around to keep everyone interested. Oliver, with regards to digital securities, hate it when people write Z instead of S. Why has tokenization, should be with an S, of real estate really taken off? With regards to digital securities, why has tokenization of real estate really taken off? Is that true anyway?
I think we are starting to see quite a lot of activity in that space, and I think the reason is quite simple. Real estate is everywhere, but it's also relatively beyond the means for any single individual to own anything of meaningful size. You know, we've all got we're renting or we're buying, we've got a mortgage, but you know, average man on the street has access to, let's say, one property. If you want to get into real estate as an investment vehicle, you know, one of the oldest vehicles in the space has been REITs, real estate investment trusts, which allow individuals to have partial ownership of real estate. But these are clunky, inefficient, and are aging quickly. So now with real estate on blockchain, people now genuinely have an opportunity for shared ownership of property, either specific individual properties or portfolios of properties. So I think it's because it lives in that sweet spot of high value item, highly accessible.
Right. I mean, okay. You know, that's interesting. I need to know more about that. Aman, with the current, all this way without saying the C word, with the current COVID-19 situation potentially speeding up central bank digital currency or CBDC in China, the digital one, I suppose that is. Which other regional markets do you see as financial institution with, adopting blockchain? Is there any particular country who are leading financial digital transformation in that way? I would say Switzerland for sure and Liechtenstein. What's your take?
Yeah, I think in Europe there's a lot happening. There's a lot of activity, right? Switzerland, Liechtenstein for sure. The Netherlands has come out fighting. Sweden is demanding to know what they're going to do in a post-cash world. France and Britain are all looking to launch experiments. I think we're going to see central bank digital currencies over the next year getting more and more MVP-like, if you like, minimal viable product. And go Liechtenstein.
Yeah. Okay, we're just about done, but we've got to have some sign-offs. And I usually go for the cheap one when I used to preside over conferences. Final words, optimism, pessimism, but I'm going to change it actually. Sorry, organisers. I'm going to start with you, Oliver, and then Aman and Richard. What's the best book that you've read over lockdown? Oliver.
Oh my goodness. Well, I should provide an industry answer, shouldn't I? The truth is I'm reading Run with Power by Jim Vance because I'm trying to get really speedy at my middle distance running. So I'm trying to break an 18-minute 5K.
Run with Power by who?
Vance, and it's about using technology to help you run faster.
Right. Okay. I don't know that one. I don't run very often, but I might look at it. Aman.
Yeah. You know what? I'm just going to say a sack full of limericks by Michael Palin because that's what's in my hand right now.
Don't mention the limericks we were talking about earlier, or we'll all be put off air. But that sounds very good. I like limericks. I think they should come back, and they should be as salty as possible. Finally, Richard, book that you've read that you'd recommend to the audience.
Oh well, this one's out of print, but you can get it if you can get your hands on it. Well done. It's called Managing at the Speed of Change. So this is by Darrell Connor. It's actually somewhere in the 90s, I think. And I reached for it because we just started a project with a client, and it's about people needing to or recognize that when they make change in organizations, the heart and the mind move at different speeds, and you can only move at the speed of change.
Sounds good to me. I will be really
I want
pretentious.
Richard's answer. That was a good one.
Absolutely. I'll be pretentious because I think of myself as a bit of an intellectual. I've just read the 40 Days of Musa Dar, which is a 900 page epic about the Armenian massacre and this mountain holding out for 40 days. Absolutely wonderful. Mixture of Dr. Zhivago, the Siege of Masada. It's absolutely fantastic. And it's good to read books that aren't about GBDC or all these acronyms that we need to use. Hey, listen, if I could see the audience and I said that was this, and we were all finished, I think they'd be cheering wildly. You've been extraordinary erudite. You're not anonymous. I don't think any of you ever will suffer from anonymity. Oh, get it in. So thank you very much for sharing your insights. I hope we see each other face to face in the next year or so. I'd love to have a beer with you. What's the joke? A man goes into a bar. Lucky bastard. I think we might sign off like that. Okay, Joseph, I think we're 1 minute over time. That's my job done. And I'll hand it over to you, sir.
Yeah, that's great. Thanks, Monty, and thanks to the rest of the panel, Aman, Oliver, and Richard Crook. Great discussion there. We whizzed through that in 46 minutes. Just a few notes then. Don't forget to connect with the panel on LinkedIn. Check out their market activity. This session has been recorded, will be shared in the coming days with a link via email. You can also take a look at our other events throughout the day on screen now. And just to let you know that our official charity for TechCity Connect is Mind, as no one should have to face mental health alone. So please do donate to that if you can. Just go to ditto.tv/mind. However, most importantly, to carry on this discussion now, please head over to ditto.tv/TCC on your screen there to carry on this discussion. We had loads of questions in from audience, so please go over there, audience members. You can submit your questions to our panel. If our panel could go over to ditto.tv/TCC as well, that would be fantastic. And that's it from me. Thank you, guys.